The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Getting ahead of myself. All right, let's have a live look at Bitcoin. The greatest Bitcoin price, XTX index, is trading at $47,497. Bitcoin is up almost 1% over the past 24 hours, and the CoinDesk Ether price, ETX index, is down slightly, about 0.2%, trading at $3,788. Taking a look at the DFX, CoinDesk's DeFi index, is also taking a step back, about 0.7%, trading at 380 points. Joining us now to discuss the crypto markets is Edan Yago, leading contributor at Bitcoin-focused DeFi project Sovryn. Hello there, Edan. So taking a look at Bitcoin, again, we're seeing some mixed results in the crypto markets ahead of this Fed meeting. What is your take on Bitcoin?
Oh, sorry, I was on mute. I was getting ahead of myself as well. Look, the big picture around Bitcoin hasn't changed. We still have a situation where if you buy treasuries, if you buy government bonds, you're losing money. We have a situation where inflation is still necessary to continue because otherwise governments, and particularly the US government, would be too indebted and too much money would need to be spent paying back debt every single year. But at the same time, the Fed is looking to calm the waters right now and provide a sense of reduced cash flows going forward. And that means trying to reduce inflation and trying to reduce the amount of money that they're pushing into the economy. And so that makes people feel like maybe assets that are further out in the risk curve, like tech and like cryptocurrencies, are maybe going to be less valuable in the ensuing months. So there's been something of a pullback as the market waits to see what's happening.
Edan, thanks for coming on. One question I have is you've said that the American public that Americans are starting to seek alternatives to banking by going into crypto. But is it really that, or are they actually just trying to take on extra risk to meet some of their payments, so to speak, because of inflation? In other words, they're taking on this trading risk by trading into crypto because inflation is kicking in and they got bills to pay.
Well, I think they're basically the same thing, right? You're taking on additional risk because whether you're a company or you're an individual, right? Whether you're a millennial who's trying to pay back the debts that you have for going to school, or you're trying to pay back your house, we all are facing the same problem, which is that it's we have the money that we have is worth less and less. There are no simple ways of earning funds anymore. It used to be the case that you could keep your money in a bank and earn interest at a decent level year after year. That's no longer available to us. And so the primary function of savings that banks used to provide, as well as borrowing and lending in the way that they used to provide it, is no longer available. The system itself has stopped functioning in the traditional sense of banking. And today, no one looks to the market for interest rates. Everyone is looking to central governments, central banks for those interest rates. The market signal is dead.
And how do you see decentralized finance playing into this? Are folks using it more and more? How do you see it interacting with the traditional banking system?
Well, the remarkable thing about decentralized finance is that because decentralized finance is independent of the traditional financial system, controlled by the same regulators and the same central banks we were just discussing, it actually does still have a live market signal, right? The pricing, while speculative, is real. And so the opportunities to trade, to try and observe opportunities for yield, those are more risky, right? They're not centrally controlled, but they're far more organic. And in that respect, it represents a stark contrast to the rest of the market, where people recognize that the stock market is going to go up purely based on the decisions that the Federal Reserve make, And so today, for example, there was a hearing where there was an attempt, or there are attempts being made to try and bring, for example, stablecoins into the fold of the regulated space, because they do actually represent a true alternative. Now, I actually think that for banks, this is a real opportunity, because the banks themselves are struggling in this environment, just like everyone else is. Banks were invented and existed for most of their history in an environment of a live, real market, where interest rates were competitive, were the result of the competition between banks. And so I actually think that they're very well placed to position themselves for the market that's going to come and be brought to us by Bitcoin and Web3, which is going to be a live market again.
Edan, this sounds like a great future, except one thing that persists is that, particularly with smaller businesses and individuals, having a relationship with the bank, sometimes, of course, there are horrible stories of banks foreclosing, but there are also stories of people having a long-term relationship with their banker, and the banker going easy on them when they miss a payment, or helping them out with getting a loan when they might not necessarily meet some of the criteria up front. What gets lost there? I mean, won't that get lost in this new world where everything is done through decentralized finance? That personal relationship and the discretion that the banks can wield over their over their lending policies, doesn't that get lost? Doesn't that eventually even hurt the smaller borrowers and smaller businesses?
I think exactly the opposite. Today, what you're describing doesn't exist really at any bank, except if you're one of the ultra wealthy, right? The ultra wealthy truly do get personalized banking.
That's not true. I mean, there are, look, I've run small businesses, and I wouldn't say I'm the ultra wealthy. I know a lot of people who run small businesses. We have a lot of small minority owned businesses that go to banks and need help, and it's not necessarily. It's DeFi won't necessarily take into account all sorts of things about communities and about the individual trying to get ahead or just trying to keep afloat. That what you're describing sounds like a soundbite, and it's great, but in many ways, a lot of small banks throughout the country have personal relationships with their smaller borrowers, and I'm talking about people borrowing small amounts of money just to get a store open downtown.
Yes, that's exactly right. I think that's totally true what you're saying, and it's credit unions as well. But what we've been seeing over the last few decades is the disappearance of small local banks and the disappearance of credit unions, and more centralization, right? As this, as banking across the world, and particularly in the US, consolidates, right? The number of banks that exist in the US today is roughly half of the number of banks that existed in the US just over a decade ago. And so personalized banking is going away with it. But I think that DeFi is the path to bringing it back, because once the infrastructure, the financial infrastructure, is available to everyone on a level playing field, as a business, as a bank, right, as any financial business, the only differentiator you have is the type of service that you're able to provide to your customer, the type of guidance you can provide them, or your ability to tie them to a wider community of which they can be part. And so, we're seeing this happen in the form of DAOs, but we're also seeing this happen in the form of centralized companies that are providing interfaces into the crypto and DeFi world and are competing on the type of service that they're able to provide. So in that respect, I think what you want to do is you want to have a level playing field in terms of the settlement layer, the infrastructure, the base interest rates, which is not manipulable, and which doesn't provide particular advantages, to those who are closest to the regulator. And that allows for many entrepreneurs and companies to flourish in a highly competitive environment of providing the most important person, the customer, the end user, with the most competitive service.